Welcome back. You're watching The Money Show. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through all of this, we are joined by Feroz Aziz, who's there to give all your portfolio-related answers, but then you can send us your queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. So, Feroz, we have Mr. Krishna from Hyderabad on phone line with us. Good evening, sir. How are you doing? Mr. Krishna?
Yes.
Hi, I can hear you. I think we have your question. You have invested 1 lakh in Kotak Flexi Cap.
Yes.
All right. And what's the time duration for this particular investment?
Yeah, maybe it's 4 to 5 years.
5 years?
Yes.
Okay. And is this SIP or it's a lump sum investment?
Yes, I see.
SIP every month 1 lakh?
Yeah, I have. No. I have been investing per month, 5,000 rupees per month.
Okay. Okay. So you want to know if you want to stick to this particular
Yeah, should I
fund?
continue or shift to another better?
Do you have any other funds in your portfolio?
Sorry?
Do you have any other funds apart from this?
Yeah. Yes.
Which one?
Parag Flexi.
Sorry?
Parag Flexi.
You have Parag Parikh Flexi Cap and you have Kotak Flexi Cap.
Yes.
That's all?
Yes, that's it.
Okay. Feroz.
Yes, thanks, Abhila. You read my mind, and I wanted to ask him which other schemes he has in the portfolio. Mr. Krishna, see, if you have two funds of 10,000 rupees per month, it's not wise to have both of them flexi cap. There's no rationale of having both flexi cap. There are about 8-9 categories which to our mind are attractive: large cap, mid cap, large and mid cap, small cap, multi cap. So there are several categories ideally you should take exposure to. Having 10,000 rupees and just taking exposure to one category is not the smart thing to do. Like Kavita also mentioned, there are plethora of funds. Let me define what is plethora of funds. There are 380 active funds and about 180, 190 passive funds. That's a real plethora of products. So having one category doesn't make sense. So have more categories. Let me read out some schemes for you. If you have 10,000 rupees, spread it out thin. SBI large and mid cap, Kotak emerging equities, DSP small cap, Aditya Birla small cap, HDFC Focus 30, SBI Contra. So these are separate categories. There are only two funds from small cap category because small cap is a marginal higher risk. So you're better off having two different schemes rather than one scheme, because like Aditya Birla will have a different style, DSP will have a different style. The intersection between these two portfolios is going to be minuscule. So these are the 6 schemes. I think you can continue with your flexi caps, but not more than 1,000 each. But I think HDFC Flexi Cap has been managed well by Harsh Upadhyay, who's also the CIO of Kotak. But I personally think it's very large in size. My analysis mathematically establishes that smaller the scheme, higher the agility, and in turn, higher the probability of generating the extra return over the passing mark of benchmark. So these are the 6 schemes you can add to your portfolio. Don't just put 2 schemes of 5,000 each.
All right. We move on to our next viewer, Shardul Lad from Thane. Shardul, hi.
Hello. Hi, ma'am.
How are you doing?
Yeah, I'm doing good. I watch your show regularly and it is very beneficial.
Thank you so much, Shardul. So you have invested in Axis Focus 25?
Yes, I have invested in Axis Focus 25 from last 1.5 years.
Okay.
And I have a significant amount actually in that fund. But my portfolio is under red. My returns are negative. So, and my horizon is 7 to 8 years. I'm not a short-term investor.
Okay.
But still, I'm having a doubt. My fund selection is good or what to do, because I have a significant amount in that.
And what about your other schemes in the portfolio?
Other schemes are quite well. I mean, they are going to with the with index, because I am having some flexi cap in my portfolio, Parag flexi cap. Then index fund is there, Nifty 50, and small cap is also there, Nippon small cap. So I have chosen this focus category fund, and I chose this Axis Focus 25. But this fund is, it is not related to, it is not going with the market trend. My NAV is less down.
Sure.
So I
All right. Feroz.
Yes, Shardul, I think you've identified the scheme right. We exited the only Axis fund in our model portfolio way back a year and a half back. And I think it was a wise decision. Now, if you look at Axis Focus, the other model portfolio scheme which we have in focus category is ICICI Focus. The difference in performance for the last 1 year between your scheme and our recommended in the model portfolio, the same category, focus category, is 20%. You are at -10 for the last 1 year, but other focus schemes are at about 8, 10, and the one which we've recommended on this show also have been 10% positive. So I would say that you have to bite the bullet and exit Axis Focus 25. Any AMC which has a lot of redemption pressures, which Axis have had, unfortunately, I'm sure they will revive from it because they're a process-driven organization. But currently, I think they are in a little vicious cycle of underperformance resulting in more outflows and more outflows resulting in underperformance because you will have to sell a lot of stocks to furnish redemptions. So I would say you can move to ICICI focused equity fund, which is Shankaran Naren, who's the CIO, personally oversees this fund, and I would say that it will be a good replacement.
All the best, Shardul. We move on, and we have Sunil Kumar Jha's question, and he's been investing in Axis Blue Chip, ICICI Blue Chip, Axis Mid Cap, Kotak Emerging, Axis Small Cap, Nippon Small Cap, Parag Parikh Flexi Cap, UTI Flexi Cap, Mirasit Large Cap, Canara Bank Large Cap, and 5,000 each in all these funds. And his retirement is his goal, but then the investment time horizon is 10 years.
Yes, so I think there are some changes, Mr. Jha, for your portfolio. I think you will have to get out of some schemes. I'll read out those. You have 3 Axis schemes. So 2 Axis schemes go. Axis Blue Chip, Axis Mid Cap would be an exit. Parag Parikh Flexi Cap, UTI Flexi Cap would be an exit. Canara Bank Blue Chip Equity Funds would be an exit. And Mira Asset Large Cap. So 6 schemes would be exited in our suggestion, of course, for your consideration. 4 of them could stay in the portfolio. The schemes which can be added are SBI Large and Mid Cap, HDFC Flexi Cap, ICICI Focused Equity, SBI Contra, and Kotak Multi Cap. These could come into the portfolio. That will result in a 9-scheme portfolio. Of course, these are not recommended just from the past performance standpoint, but from the portfolio constituents and our belief that those stocks as a basket should generate you alpha.
All right, we move on to our next viewer question, which is from Deepak Joshi, and he wants to invest for his daughter. She's 27 years old, and the investment time horizon is 15 to 20 years.
Yes, Kavita. So, Kavita, of course, if he has, she's 27-year-old and the time duration is 15-20, I would suggest Mr. Deepak to write down schemes. There are a laundry list of them. There are about 9 of them. SBI Large and Mid Cap, HDFC Small Cap, Invesco India Small Cap, HDFC Flexi Cap, Kotak Emerging Equities, ICICI Focused Equity, SBI Contra, Kotak Multi Cap, and SBI Franklin India Blue Chip Fund. These 9 schemes, which are from different categories, small cap, I have given 2 different funds. One, Invesco India Small Cap is managed by Tahir Badshah. It's a small fund with 1,500 crores. Well managed and microscopic view of the CIO is always critical in a small cap. HDFC Small Cap, which is managed by Chirag Setalwad, he doesn't stop amazing all of them. In terms of the size of the fund, he has been able to generate excess return for years and consistently. So these are the 9 schemes which, Deepak, you can use for your daughter's investment.
We have a viewer online, Mr. V. Venkat Subramanian from New Delhi. Hello, sir. How are you doing? Good evening.
Yes, sir.
बहुत बढ़िया.
Doing fine.
जी. Okay, so I can see you have given us your portfolio, which says you have around 6 funds in your portfolio, and
Yeah.
you're just 23. You started with this?
Yes, ma'am.
Okay, since how long you've been investing? 8 months. Okay.
8 months.
That's nice. And you got these funds identified, I mean, this is your research, or you went to a certified financial planner?
No. I have my own solution. I have done it.
Mm-hmm. Interesting. Okay. What financial goals have you lined up for yourself?
Just retirement is nothing else.
Wealth creation?
Nothing, wealth creation and retirement.
Okay. All right. And how much corpus for that?
5 crores at the minimum level.
5 crores. Okay. Feroz, it's very nice for someone to, align a retirement goal as their first goal when they start investing or start the process at least. What do you have to say about the funds? A lot of repetition?
Yes, Kavita, a lot of repetition. Firstly, I think you've identified right. At the age of 23, if somebody is hell bent on planning retirement, he's surely going to be financially independent and very prudent. So, very good, Mr. Subramanian. Point one. Point two, I think 4 schemes ideally can go out. Canara Robeco, you have 2 schemes. Both, according to us, are not the best of Canara's flagship schemes. Canara Robeco Flexi Cap is a better scheme in their basket. Nifty 50 and Sensex, both are ETFs. I think if you mix active funds properly and choose them wisely, you will be able to beat Nifty and Sensex over long periods of time. It's a large country with great business opportunity. So sticking to Nifty and Sensex may not result in the extra 1-2%, which on a year-on-year basis you can get. So the good part is, since you are just 23 and if your retirement is at the age of 60, if you invested 30,000 rupees every month for the next 37 years, you can get to a mind-boggling number of 44-45 crores at a 14% growth in the next 37 years. So that's the kind of corpus you can accumulate, given the fact that you've decided to invest early. And that's why every investor should invest early. So I will read out some schemes which you can replace the four schemes which I mentioned: HDFC Flexi Cap, HDFC Small Cap, SBI Large and Mid Cap, Invesco India Small Cap, ICICI Focused Equity, SBI Contra, and Kotak Multicap. These schemes can definitely add to your portfolio, and please don't hesitate having 9 schemes in your portfolio, because you're going to be investing for really long periods of time, and your corpus also is reasonable. I think 30,000 rupees per month can get you places.
All right, we move on to our last question. Halim from Chennai, and he says that he's been investing in Motilal Oswal Flexi Cap since last 4 years, and he's not seeing any positive movement in this fund. He wants to understand if he still should hold this fund in the portfolio, and it's for long term, 8 to 10 years.
See, I think Motilal Oswal, correct me if I'm wrong, Motilal Oswal multi-cap fund, is that the scheme which you mentioned, Kavita ji?
Flexi Cap. He says Flexi Cap.
Yes. Motilal Oswal Flexi Cap, I think what has happened is, when you look at Motilal Oswal as a fund house, their principle has not worked for the last 1-2 years. But I personally think their philosophy of buying right and sitting tight and having a low churn ratio on the funds is not such a bad strategy. You've got about 4% return over the last 1 year, which isn't too bad, but isn't too good as well. If you look at the model portfolio 11 schemes, I think most of them have outperformed a flexi cap, but never have one scheme in your portfolio. If this is the only scheme, Mr. Halim, you have to be very worried. Mutual fund, because of the ease of investing and the lower capital need, 500 rupees or 1,000 rupees, helps you buy 6-7 funds. Even if one fund manager falters, you have other people to make up for one bad or one dud fund. So SBI Large and Mid Cap, HDFC Small Cap, Invesco Small Cap, Kotak Emerging Equity, HDFC Flexi Cap, ICICI Focused Equity, SBI Contra, and Kotak Emerging, Kotak Multicap. All different funds from different categories, different asset management companies, different fund managers as well. That will give you a very diversified portfolio, even if 1 or 2, which is bound to happen, that if you have 8-9 schemes, you're going to have 2 of them which will not deliver. So there are going to be the other 7 who will save the light at the end of the tunnel. So they will let you see the light at the end of the tunnel. So Alim, so have a more diversified mutual fund portfolio.
Right. On that note, thank you so much, Feroz, for removing time and helping our viewers with their financial portfolio. But we move on. Well, we all know the IPL season has begun. Cricket, as we all know, is where factors like fitness, speed and agility are important. And talking of fitness, Herbalife has a proven record of helping athletes optimize their performance. The premier global nutrition company has now become the official partner of Tata Indian Premier League for the season 2023. Here's a report.